Well, Mike, it's 10 a.m. It is time to get started. You ready for me?
Absolutely, yes, sir.
Cool. All right. So, for the uninitiated, this is Michael.York. He's got multiple hats, and he's going to explain to you kind of one of his hats. But he's a realtor. We've worked with Mike for a long time now, and his family. I think what you could be really helpful in is kind of giving us the perspective of how do you handle this as the realtor, and then how do you handle it as an outside vendor or a consultant, and kind of what is the need to know. And so we have a new, the mindset for this video is learn one thing. That's the mindset. So the challenge for you is to make sure the audience learns one thing, and I'm part of the audience, about whatever it is that is Michael.York, whatever it is.
Yeah, well, I appreciate you having me. As you mentioned, I do hold a residential real estate license and have done so for some time. Grew up in the industry down here. My father was a builder and realtor with Downing Fry for a long time. Still is till this day. But after probably a couple handfuls of years ago, went into the engineering space. So I still maintain my license and dabble personally in it, but more so, I was in the engineering community. And our our firm's practice had been around for about 30 years in Naples, previously under the name of Forge Engineering, and transitioned to Socotec, which I was a part of that transition as a managing partner. Through that, once Surfside had collapsed, we were retained as one of the expert witnesses in multiple capacities. And then from that, I helped at the state level through representatives and senators and lobbyist institutions advocacies, opining on the legislation that you now see in place till this day.
So I get to
Um,
blame you for all this? Is that what you're saying?
well, I should preface that by saying I was the one trying to, you have a lot of people built in this industry that don't, that are state representatives or legislators that don't have experience in this industry.
Yeah.
So, trying to create a bill for everybody in Florida that is hugely impactful across multiple sectors or ecosystems is incredibly challenging. So, really just talking to them, informing them that the language that they present to you in this bill does matter. The intent of the way it's written and the way it's interpreted in your community, the legal community, are two totally different things. So, trying to consolidate some of that and alleviate some of the pain points, and then making it feasible, right? We don't want to yes, we have a critical issue at hand, but we don't want to shut down the real estate industry or the building industry, or impose, unrealistic expectations on these associations, even though they are critical. We want to make sure it's done in a thoughtful, intelligent, and strategic manner. So that's what I've been up to up until October, and then retired from that and moved into back into the private sector with EECON Construction Management Services, which helps. We do residential. We have a residential arm for reconstruction of or renovation of condominium units, residential new builds. But then we also have a commercial sector where I specialize in helping associations perform enhancements, amenity enhancements projects.
Oh, that's great, man. You know, I we touch on this. We've had a couple of videos on the legislative updates, the condo requirements, the milestone, the Sears, the turnover report, and then you were on one of the videos and you actually said, "Hey, I know a lot about this stuff. Let me know if you want me to give you any more information." And I jumped at it. You had some kid, illnesses. I had some kid illnesses, so we delayed it a couple of weeks. But I'm so glad that you're here. And Mike, thank you for joining as well. Mike, you have one goal here. You got to learn one thing and you got to teach one thing. You ready for that today?
I am.
So, Surfside collapse. This is was a just a travesty over on the East Coast. The buildings had some major structural issues that had been deferred. Is that how you would explain it? I mean, the condo building, they were deadlocked on making decisions to repair the building, and it led
Yeah.
to a massive major disaster.
Yeah, so I mean, this is a common practice in my, in the engineering space. We did a lot for the realtors down here, but 75% of my business was based in association worlds. So it's a common practice. They come to a deadlock. There's a group of people that want to come in, they want to enhance their property, they want it to look beautiful, they want it to be structurally sound. And then there's another group of people that say, hey, we don't want to spend any money. We don't want to
Yeah,
increase fees. We've had it this way for, 15, 20, 30 years, whatever it may be. And it's beautiful. It's perfect. It's exactly what I wanted. We may be on fixed incomes.
yeah,
So it's a difficult task. Now, in this particular incident or incidents of what happened here, you had an unfortunate situation of homeowners, and then you also had, I think it was like something like 67% of the units were owned and operated by investors. So from an investor standpoint, you want to keep fees low, right? That erodes your profitability or your revenue stream. And what happens here, and then the other, so that happened. You come to a deadlock and you can't agree on anything. But what more importantly, what happened from there, what the state's trying to alleviate is that you had a few $1 million in repairs like concrete restoration, delaminated stucco, waterproofing, painting, etc. So there's a gamut of issues that take place in your reserves, but people don't understand the severity and boards and ownerships, and that's what through my advocacy I've tried to do, and what we're trying to do here. If you try and save $1 today, it will cost you 10 tomorrow, right? And there's no way for you to save that. I don't care where you're from in the country, what your past experience is, because I have a lot of, people that come down here and say, well, I'm an engineer or a contractor. Makes no difference. I've dealt with all of them. Not to be egotistical, but it makes no difference. Our built environment, our climatic issues are 100% different than wherever you come from. I assure you of that. And then, when you try to save that $1 today, it costs 10 tomorrow. But if you don't do it the year after, right? It's 20, 30, 50. And that's what happened in Surfside. They went from, a $3 million restoration project to the last numbers that we were informed of were about 16 and a half to 17 and a half million dollars of repairs. It's insurmountable, right? And boards don't have the experience. Where the hell do we start? What do we do? In what
yeah.
order
It's
do
a
we?
volunteer board.
Exactly. So, that's kind of what happened here. Now, we don't know, there's a lot of basically they run a risk analysis from an insurance perspective and say, hey, we're going to pay out, right? It's cheaper for us to pay out. It's less time. It saves face. We're going to move on, cut our losses, and we'll pay an insurance premium. So, as far as the root cause failure, they have some suggestions out there. But honestly, you don't know if somebody hit a structural column in here at at 1:30 in the morning coming home from
Right.
a bar
Right.
that just happened to be so deteriorated, or they hit it at such a rate of speed, and that was the one that triggered this terrible tragedy. So, that's kind of what starts this effect from people is just a lack of understanding and education. And then it seems insurmountable because they don't have the right team built around them. They think they have to burden all of this themselves. But instead, if you put a good team around you that can help guide you through all of this, it's really not insurmountable. It's just putting together a master plan to do so.
Yeah, so we've got the major reason to do this. It's a great reason. And I make the comparison to permitting. The reason for permitting is very genuine. We want to make sure that consumers are safe, and we don't want them to be taken advantage of by a contractor that, that's cutting corners.
Yep.
Now the rollout of that, that's where we're starting to get some pushback and some uneasy moments. Why don't we go into some of the things you wanted to point to?
Yep.
I'll let you kind of drive the ship on what you think the main audience here would want to know about this on where, so we know how we got here. Now let's talk about what the legislature did to kind of start to address some of that.
Yeah, so I have a lot of information. I'll try to go through it in a timely manner, but if you have any questions or the audience does, feel free, Christian, if you want to interrupt me, because I can, for
Don't
the
worry,
last
I'll mute you
years.
if I have to. Yeah.
For the last 4 years, I've been dealing with this, so I can try to add as much as possible. But so we're going to talk a little bit about legislative updates. We recently had a special session. We have a session coming up. Insurance, and project advisory. So I do want to tell people I'm not an attorney. I'm not an insurance agent. I've dealt in this practice for a long time, though, and have valuable information to add, or that you can go back to your respective
Good,
personnel with and,
good,
and
love it.
and make sure that. So legislative update. So in really in 2024, a lot of this happened. You have HB, which stands for House Bill 1203. I've been telling people that this was coming for a while, but this was not part of the initial subsequent legislation that took place. That was the so-called Surfside Bill or Safety Act. So now, if you have education is going to be paramount. Yes, you are on the board. You're a manager, and they understand this isn't your area of expertise, but you have gone through the process to be on the board. And education, education, education. It is imperative that you all take the opportunity, even as real estate agents and real estate professionals, right, to take any education that you can and make sure that you're as best informed to set yourself apart as to what's happening and why it might be happening. So, any association that has less than 2,400 units, okay, you'll be required to take a 4 hour continuing education course or certification course, really. Okay. And before you could sign off on a piece of paper that said, I've read our governing documents and rules and regulations and I understand it. And, now, hey, you've been elected to the board. The caveat to
What
that.
hey Michael, what are the associations that would apply to here in town? I mean, would that be like Laley, Pelican Bay, maybe?
Well, 2,500 or more
That's a
would be
big, that's
would
a massive subdivision.
That's a massive subdivision. So that would be the master subdivision. If you were on the
Yeah,
master, so yes, you could look at like the Laleys, up north. There's a lot in the center of the state, especially
yeah.
around Orlando, Tampa, Bradenton, Port Charlotte is gaining traction in this route. You look at not Ave Maria. You look at Badcock Ranch and things like that. There's a lot of communities that are they're going to have 2,500 units or more between condominium and homeowners. So this would be master boards typically that you're looking at here. Now, 2,500 or less would be your typical. So there's three Florida statutes: 718, which is your condominium act;
Yep,
719, which is your cooperative act; and then
yep.
720, which is your homeowners association act. Okay. So the 2,500 units or less would apply to all three of them. And that's the bulk of what we're looking at is the 4 hour continuing education or the certification course. Now, if you're 2,500 units or more in these large scale master plan communities, then it would be 8 hours course. So they want to make sure that you're informed on, financials, reserves, milestones, auditing, accounting, record transfers, etc. All of these things play a crucial role into how the association best practices, kind of how they operate from day to day. So they want you to hear it from usually from a legal professional now that specializes in general counsel to associations. So this was enacted in this past session in 2024.
So essentially, this House bill was done to make boards more accountable to their members, to make them better educated, to hopefully provide less slippage. Basically, let's make a better board just globally. And so you've
Right.
got the CE certifications. It says on here, associations with 1,000 lots or more must do an audit regardless of the revenue. That sounds great. I love that. Makes not allowing records access criminal. So you
It's a
basically,
big one.
that's a
That's
big one. I
that's a
mean,
big one. Yep.
realtors, and Michael, you've been on this before where you've tried to get HOA documents from your board or from the property manager, and it's like
Yep.
pulling teeth. It's just awful. They make you seem like the criminal rather than maybe them. Um,
Yeah.
not, and then providing that an HOA with 100 or more parcels is required to post certain official records on the HOA website. And that's just to promote transparency to help with transactions and resales. What's this
Yeah.
last one? Prohibits an HOA. What is that one?
Yeah, so basically an HOA, on the ARC committee, which a lot of you guys are familiar with, you can't prohibit somebody from on the interior of their unit from certain requirements, right? Like in a
Okay.
condominium, you can say, well, you can't do this, X, Y, or Z because of, sound on the floors, or it might be a structural column, so we can't remove that. On the inside of the house, as long as it's not visible from any adjacent common areas or golf courses, it is your discretion on what you want to do on the inside of that residence. I do want to go back though, real quick to the records. Guys, this is really important because, from the engineering perspective, the more information that we have, or from a legal, if we have to file a claim, there's certain insurance attorneys that file claims. No one ever has records. And I was talking to a board down on Gulf Shore yesterday, and they're like, "Hey, our records are they're basically kind of like illegible. They're old, they're on yellow paper, and it's like, guys, let's recreate those, store them digitally, because if you lose those, right, it is a huge cost for us to recreate those. It also helps us provide, as many industry partners, helps us draw a root cause analysis in a much faster, cost-effective manner, and the management companies wouldn't turn this stuff over. So it took me a year to get one association to find out the management company had changed in Sarasota, and they hadn't provided the milestone or the SIRS to them, right? So the record keeping, I think, is a big thing in
It's a
including
big
this.
thing for, how we operate in this industry as well. I had a deal last year and they were doing a turnover to a different property manager, and they refused to share information, and it basically sabotaged two or three transactions of mine. It took 6 months to transfer from one property manager to the other. Brutal. It was absolutely brutal.
Yep. So now they have it's a very short time frame. It's a matter of weeks to turn over all that information. And it also requires them to document all of the information.
Okay.
Whereas before, we get whacked by these hurricanes, and the first thing they do is, hey, Mike, can you send somebody out to inspect our building, right? But they have no documentation on anything that's ever been done. They don't have any plans, and it's like, man, all right, I could have been done with this 6 months ago, and for, $30,000 less. But I had to recreate all of this, and it takes time and money to do so. So I think this is a big thing for
Love
associations.
that. Love that. Cool.
One of the things that came out of all this too is, and I'm going to touch on this quickly and then move on, but is House Bill 1029. So we had the My Safe Florida Home program, which was enacted in 2006. They funded it several times. They stopped funding it, and then they allocated another 200 or I think they allocated another like 175 or 200 million dollars towards this over the last handful of years. And basically, this goes directly, I think it's up to, I believe it's $10,000 per homeowner, residential homeowner. And these are grants that help harden your assets against hurricanes. So anything we can do from, hurricane protection, windows, etc., that can help harden the assets, protect them, so that we have to file less insurance claims and leave our insurance institutions less vulnerable. What they did in the last session, though, was they created a My Safe Florida condominium pilot program. Okay, and they allocated just under $30 million to this. And they wanted to see how the association world responded to it. And this will be, or they'll be looking in March and April once legislative session hits, to refund this program or increase the funds to this. Because you can see there's a huge difference between having, $300 million dollars and $30 million dollars, and you have, like 27,000 associations or 25,000 associations in the state of Florida. There's a huge discrepancy or variance there. So they'll look at funding this, but this will give you up to $175,000 towards your association. They'll match for every dollar you spend, they'll give you two. And this will go towards hardening your assets again. Windows and doors, hurricane protection. I believe roofing is included in this. And the important thing is to actually go online and work with your association. You'll need to get an inspection done, wind mitigation. I think you have to supply your insurance policy. But you need to get online and apply for this because it is in sort of chronological order. So if they, if they only have I don't know what 30 million divided by 175 is, but let's just say that's 125 associations, and you're number 126, you're first on the list once they renew or replenish those funds. So take the time. It's 175,000 isn't going to save your world as an association in most cases, but it's $175,000 that you keep in your reserves that you don't have to allocate towards a particular project to harden your assets. So take advantage of this grant. That's what the state wants to see.
So is this something, obviously the most recent updates to this are condo related. Is there money left for single family homes as well or no?
I believe the single families at this time are were taken up as of like November,
Yeah,
but they will replenish these funds. They're very excited and happy that you all are taking advantage of this. So it will be likely be replenished. To what extent, I can't tell you, but the insurance carriers. They hold all the weight. I know Florida, I know the Realtor Association and the Florida Bar. I know they have a lot of weight at the state level, and nothing against them, but the insurance carriers hold a vast majority of the weight up in Tallahassee. So if
yeah.
they see you using this and they advocate for it, I think you'll see this. I think you'll see this be replenished.
Yeah, let's hope so. That sounds like a great program. Now, I think
Good.
you had the next topic was indeed insurance. And I saw something in the news yesterday. Let me see if I can pull it up. Let's see. Hold, please. Here it is. So, Federal Reserve Chairman Jerome Powell said, if you fast forward 10 or 15 years, there are going to be regions of the country where you can't get a mortgage, he said to Congress, noting that banks and insurance companies have been pulling out of coastal and fire-prone areas they deem to be too high risk. Mike, did you promote that on your video on Monday? Holy smokes, that's a big deal.
Scary.
Did you read that yesterday, Mike? That's craziness. I mean, it.
I didn't see that, but I will say this. I just got my homeowner's renewal notice in the mail, and for the first time in 10 years, my premium went down.
Hey, that's a win. Good
That
news.
was made a believer of me. So I do think these reforms on the state level, particularly with what they're doing with attorney fees, I think they are making a difference. There's no question. You wouldn't have that many companies, new ones, coming into the state if the legislature hadn't done anything. So I think we are seeing the impact. Most of us would like to see the impact quicker, but I think it's slowly helping.
Well, Michael, what
Yeah.
do you think? What does your slide say?
Yeah, so to Mike's point, the attorney fees get a lot of gripe at the state level. In my opinion, like I've explained to them up there, hey, you all wrote the policies. No offense, but you did. But I think more importantly, what has helped, is basically they've decreased the amount of time that you have to file the initial claim and then supplemental claims over the last handful of, I'd say maybe even a little bit more than a handful of years, kind of since Irma.
Yeah, yeah.
Um,
So when Irma hit, you would have people for the next 5 years were still filing claims based on Irma damage, and they saw that as a major issue. And I think Michael, and I won't hold you to it, but they limit it to you have to file within 12 months of the event.
So you have to file within 12 months of the event, which is coming up in October. Just for those of you that may have been affected, and then you have 18 months from the time the storm hits to file a supplemental claim.
Okay.
So those things are helping stabilize the industry. You also have carriers, you have more competition coming in, to Mike's point, where mine stayed the same, thank God. But to seeing some reductions even on the association side, and you're talking, you could be talking a $200,000 premium to I have some in Pelican Bay that are a million plus premiums. So just to stay the same or even see a little bit of reduction is drastic. But I think those timeframes are helping a lot with also with the frivolous claims. You had people that, and they also, more so what I think helped even than the attorney's fees are would be the assignability, right?
Yeah.
Now,
So
now
explain
that
assignability, Michael. That's where let's say someone knocks on your door and says, "Hey, if you sign me over your insurance benefits, I'll go fight for you. I'll file the lawsuit." That's essentially what they were doing?
Yeah, so it was a terrible practice, and they just got rid of it because they held out on roofers to, they basically didn't allow any assignability except for roofers. Then they came back and said, actually, roofers, you're not allowed to do it either. These people would knock, you'd have people, they're literally called storm chasers. They come from the Oklahomas, the
Yeah.
Kansas, the Texas. You see the trucks roll in after a storm. They knock on your door and say, hey, I can get you a free roof, or I can get you a new roof.
Oh yeah.
And they have attorneys that work for them that will basically, they're frivolous claims, and so frivolous that you might even, I've seen them. I'm not making this stuff up. They'll walk on your roof and crack, hey, I'll go up there and inspect your roof for you,
Yeah.
and they're cracking tiles, or they're pulling up, tiles so that there is damage. So now, without any assignability, they're not allowed to knock on your door and say, I'll take over your insurance claim. I'm in control of it now. I'll dictate, what happens. We'll get the attorney involved. The attorney, I'll release the claim to the attorney. The attorney handles everything. And then basically, that $30,000 roof turns into a $70,000 project because we have attorney fees, right? They're inflating the cost. And all of these factors, anyways. What happens is the insurance industry goes from having, a $1 billion claim to having a $7 billion claim,
Yeah.
right? And they're
Yeah.
larger numbers than that. It's so frivolous. Now they've taken that out of there, and you have to justify the claim and have to draw a conclusion, which we'll talk about a little bit later. To, hey, this was the pre-existing condition. Here's the post-existing condition, and here's the root cause, failure analysis from a licensed engineer, perhaps that an attorney can go to, and work with. So
Yeah, I
that,
think what's crazy, and I'm curious your opinion on this. I'm still seeing roofers do a version of it.
yep,
So instead of an assignment of benefits, what they're doing now is they're saying, "Hey, let us sue on your behalf, and if we win, you have to use our contractor to build your roof. And if you don't use our contractor, then you just have to pay us 15% of your reward or something of that nature."
yep.
Um, I think the claim is smaller because the attorneys are not allowed to claim attorney's fees, but they're still kind of manipulating it a little bit. They're tying you to this roofer who's saying, "Hey, I'll go do this for you."
Yeah, no, I mean they're trying to find loopholes, and not all of it is ethical,
Yeah,
or
yeah.
legal. I'll be honest with you. So, the first thing to do is to have an assessment done, right? And there's even attorneys that'll provide free consultations that
Not me. I
specialize.
don't get on roofs, Michael. That's not going to happen.
Me either. So, they'll do free assessments, and there's a process to it, which we can talk about on a different time. There's a process that helps you, one, it eliminates the time frame that it takes. The cost for you to replace that is more of market value.
Yeah,
It's more, and it's not more, it is just legal in nature. So, if a roofer is approaching you to do so, I would caution you to move the other direction, look the other way. And I don't have a dog in the fight anymore. You can always reach out to me, or somebody else, and make sure, hey, what is the correct process to go about? How can I protect my home,
yeah.
and my family by doing so?
It's a tough, I'll say it's a catch-22 for homeowners because let's say a storm happened and that's why they're interested in knowing more. Well, all the local roofers they're all bid up. They're going to go to their pre-existing customers, the people that are in their backyard. And so if you don't have an existing relationship with a roofer, well, now there's this guy. He's in my front yard and he'll do it. It's
Yeah,
tough.
but here's what I'll tell you from my past experience, and I could tell you 1,000 stories because we've worked on probably, I'm going to say 5,000 claims. Okay,
Okay.
I don't know if that's exact, but
Hey, let's say it's at 5,000. I'll go with it.
yeah, let's just say I have experience in it. I've seen people and I caution people, wait until you get somebody that is local, boots on the ground, that is
Yeah.
entrenched in
Yeah.
this environment, in our market space, our community. It is so important. There was a facility in Estero, right, the village of Estero. I did 154 buildings next door to it. It was done $1.5 million under budget. And it was done 6 months early, right? And this, you're talking $18 million worth
Yeah.
of reconstruction work on roofs. The neighboring community, in a master planned community, not to be named, chose somebody from a different location and said, Mike, I don't want to pay for your services. These guys said they can handle it all. I said, that's fine. I said, listen, here's my number, store it. I'll follow up with you in a year because I know that you're going to need us. And they said, well, why are we going to need you? I said, don't. I said, you'll find out, right? They call me back in about 9 months. The woman is crying on the phone, right? Mike, I'm so sorry we didn't go with you. We really need your help. We put all these roofs on. We have leaks in almost every single building. So you went from 58 buildings thinking your roof was being replaced. They got the insurance claim paid. The roofer it was poor materials, poor workmanship, and it was leaking like a sieve, all the way down from not only the second unit, first floors had problems, right? And guess what? The unfortunate part of that, insurance doesn't pay twice.
No. No.
So now that's on you as the association. So be I just caution you, please don't just run out there because it's a time somebody's standing in your front yard. Make sure you take the time to see, how long have you been in our market space? Do you have boots on the ground here? Are you brick and mortar? Give me past work experiences. Do you have an engineer or an attorney that can vouch for you, etc.? So ask the diligent questions because you can really be taken advantage of. Um,
I have a question here, Michael. You were talking about the guy, the unethical guy that walks around a roof and actually creates damage
yep.
and says you need a new roof, etc. As a homeowner is trying to protect yourself, would an alternative be to hire someone who does the inspection with a drone? So no one is actually up on your roof, but the drone is doing the inspection. Does that make sense?
That's a great question, Mike. I mean, yeah, a lot of the drones have become so sophisticated now, and the cameras are incredible. So you can do a lot of them with drones. However, we need documentation. The more important thing is having somebody on that roof that knows what they're doing and has their moral compass pointed in the right direction. Like us, we need to take on a project. If I came to your house, Mike, I might take 1,000 photos of your roof, 500 photos of your roof. Now, I may only supply 100 of them to the association or to the attorney or,
Insurance.
or the insurance institution, but I have a whole database of things, that draw that root cause failure to the storm. And that's what we're looking for. But drones, just having an initial survey done, not a bad idea.
Yeah.
You can even have your roof cleaned by drone now, so nobody's touching the asset.
This is a guy I've used to do my roof. Let's see if it zooms in. He probably doesn't. But Florida Roofing and Construction. That's who I refer a lot of people to. You got to have that relationship though. You got to know who you're going to rely on. Michael, my own brother got scammed by a out of state storm chaser. He got scammed. They took his money. He was paid half. They did half. Never saw him again. It was a mess. It was a total mess.
Yep. And that's what we're trying to get rid of. You have disaster response firms that are like that too. You have to be really careful with them during a storm too. There's good ones out there and there's bad ones. So that would be another scenario. They'll take your deposit or they'll take your insurance proceeds and they won't do any work.
Yeah.
But now you're obligated to their contract. So please have an attorney review it before. Don't ever sign anything unless you have your attorney review it.
Yeah.
You know,
I
I'd,
agree.
I'd
I had another question, Michael. I read an article last week that said 65% of the homes in Florida have shingle roofs. And yet lately there seems to be this movement to get away from shingle roofs. I don't know that that's a reality. I mean, really, the cost factor there is weighs heavily on a lot of people.
Yeah, so the third bullet point here is roof replacements, and that's a great point, Mike. So the insurance carriers are still, I mean, they're still skittish of our market, right? And you can understandably so. I don't blame them. So you'll start to see in years 14, 15, 16, 18, your in premium will start to start to gradually increase, and then it'll explode, right? Because they have a large amount of data that suggests their claim rate is going to go up, and the amount of that claim is going to go up exponentially once it reaches these points. So, having to replace roofs has become a big thing. And I'll tell you two points. One is on shingles. Everybody's trying to go back because it's kind of irrelevant of material now, whether you're in a high rise or a single family home. They want that roof replaced. Well, shingles is the most cost-effective way. It's also the most prone, though, to hurricane issues. And if you try to go from, the other thing too is if you try to go from one to the other, you have to make sure that your decking and your support are appropriate to do so, right? So you can't go from a shingle roof all times to say, hey, we want to put on a barrel tile roof or a flat tile
Yeah.
roof. There may be additional work that needs to be done in order to do so, and that weight load that you're now placing on the asset. The other thing to do is to start looking at this ahead of time. Talk to your agent. Don't just renew it. Talk to your agent. Is there anything that we can do to look more appealing? And I'll talk about that a little bit later on how. But also that we had a place in Pelican Bay, a high rise, their premium went from like 700 grand up to like over $1.25 million. So I went to the board and said, hey, why don't you put on a new roof? This is what your roof suggested to cost. We can send it out to bid. In 2.5 years, you'll pay for your roof. Why would you pay the insurance carrier? You're not getting any of that money back. It's creating no value to you. So that roof came back at $1,680,000. I said, hey, I got another system right now. It's called a wind vented roof system. And I said, I think it can be like two-thirds of the cost. Let's go to your insurance agent, make sure it works, make sure it'll be considered a new roof. Went back to them. Now you're looking at $980,000 for that new roof. So in 2 years roughly, they paid for their new roof to be installed rather than just paying the premium, the increase in premium.
Yeah.
So those
Yeah.
are things for homeowners to, and associations, if you all are part of them, to start looking at, be forward thinking.
Love that. Cool. Very cool. All right, Michael, you got about 10 minutes.
Yep.
What do you want to hit next?
So let's do I'm going to do the building safety, the milestone inspections. We'll run through those. So it started as SB 154, went into SB 4D as a revision, now HB 1021 in the milestone inspections. Guys, what they're looking to do is make sure that these assets and these structures are safe for, habitation and occupancy, for you, your guest, the workers. And it has to be done by a licensed professional engineer in the state of Florida, as you've probably heard. Um, and they removed the 25 years and proximity to the coastline. It's now 30 years of age or older. You needed to be compliant by December 31st of 2024, which was, a few weeks ago. If you haven't done so, I encourage you to do that. They are going to be looking at that. Your insurance is going to look at that. They'll non-renew you. So if you think, well, I'll just wait and see what happens, or you're going to change the dates, they're not changing the dates, right? The legislature has come out and said, Bradley, Lopez, Perez, Pizzo, all these people have come out that are intimately involved in this process. They're not going to help you, right? It's too much skin in the game for them. So get it done and get it done by the right person. If you need help or you're concerned, I've seen a lot of rudimentary analysis out there. I can assist you, with that. Again, I don't have a dog in the fight. I'm not charging you. I'm just here to help as best we can. Make sure it's done appropriately. That is a problem at the state level, making sure that these rudimentary analysis get thrown out. I've seen some because then it triggers a phase two, which we'll get into. So that's why I say be cautious. You're paying for it. I want to know if I'm paying this money, I want to know where my asset stands. I want to know
Yeah.
what I have to do. This is a huge roadmap
Right.
for me over the next handful of years or a couple handfuls of years. So there's two phases. Phase one, where I'm just doing a visual observation. I'm not tearing anything apart. I'm coming to see, do you have any areas of structural concern, deflection, sagging, spalling that's occurring, things along those lines, structural components of the building that could or would lead to a potentially harmful situation for occupants of the building. If you don't pass a phase one and you have areas of substantial structural deterioration, you have to go to a phase two. And this is why I say who you hire matters, right? If you go to a phase two, right, I can bankrupt your association in a heartbeat, right? Like that. You can't, it's hard for you to stop me. I can justify pretty much any invasive or destructive testing that I want to do to opine because my license is on the line or our firm's license is on the line. So as an engineer, I can go through and say, well, I want to open up X, Y, and Z. I can bring in professionals. A $20,000 assessment could turn into a $250,000 assessment before you know it. So who you hire matters. And if I can be of help, please, please reach out to me. Again, I don't have any dog in the fight, but I want to make sure that you all are protected. Once you move to a phase two, that report has to be supplied within 180 days after the phase one is completed. Um, any repairs or any deficiencies that are outlined in that phase two, you have 1 year to show that you've either commenced on them or are engaged in that process. You may not have been able to have the work fully performed yet, due to all the hurricanes, materials, workers, etc. But you have to show intent. Okay.
Yeah, gotcha.
And so that's why.
Let me ask you a couple of questions, Michael. So everyone, a lot of my audience are realtors, okay?
Yep.
So what they need to know in regards to this, because a lot of this education is to the board, to the members of that board, but it's also incredibly valuable to us. And we have another kind of perspective that we need to try and navigate. So first things first, it's usually 30 years or older
Yep.
and 3 stories or taller. Those are the only buildings that apply, right?
3 stories or taller, but the local building municipality
Can
can
change it.
expedite it. Yeah,
Yeah.
they can expedite
So
that
let's
time.
say City of Naples. I don't know this for a fact, but I've heard it. City of Naples says all our buildings are going to be within 3 miles of the coast. We want 25 years or older. Is that
Correct.
right?
They
Okay.
can. Yes, Steve Beckman has that ability. Yep.
Okay, so generally it's 30 years or older. Some of the properties are going to be actually 25 years and older, and it also has to be 3 stories or taller. So if you only meet one of those, if it's 50 years old but only 1 story tall, doesn't apply. It is not mandated, right?
Not mandated
Probably
by the
still a good idea, don't
by
you
the
think?
statute. Well, I'll get into that like in the next slide. I'll tell you what the
Okay.
insurance is going to offer and what's a good idea, even if you're not required to do this.
Okay, cool. So you know, the when you sign a listing agreement, let's say you're the realtor, you sign a listing agreement, NABOR actually has questions about the milestone and then the structural reserve study and then the turnover report. You have to answer those questions, and in the simple answer, 30 years or older, 3 stories or taller, it would be yes, required for milestone and the structural reserve study. And then
Yep.
the second part, is it available? And you just answer it. It either is available or it is not. If it's not available, as far as the contract is concerned, you're okay. As long as you disclosed it, that's all you needed to do. If it is available, now you've got to provide that to the buyer as part of the condo review period. Now, this gets a little bit deeper as in the sense of what the property manager, what the board has to do. They don't just do a milestone. The first stage is a phase one, right? So they're
Yep.
doing their phase one. If the phase one's generally okay, it probably stops there for the board. And then they have what, 10 years to do another one?
On the structural integrity reserve study, it'll be 10 years.
Okay. And
Yep.
then what about the milestone? Is that every 10 years or?
So we don't know what they're going to require yet. In Miami-Dade and Broward County, you have a 30, 40, and 50-year recertification. I
Okay.
would assume that there would be something, they're not going to let you do one and then go indefinitely.
Yeah. There'll
So
be an update. Yeah.
right, right. And you'll have more transparency with the SIRS as well. If you're required to do this, you're required to do the SIRS, and you'll have more transparency through the SIRS as well to make sure that the association, the components or the assets have been taken care of.
Okay.
So yes,
Okay.
and
So now
you
let's
and
say there are issues that are identified in a phase one. It's structural. So it's roof, foundation. What are some of the major structural items?
walkways, lanais, things along those lines.
Stairways, maybe.
Facade, stairwells. Yep.
Okay, all right. So let's say they identify some issue, some major issue. You're now required to do a phase two. They can do a lot more invasive testing by law. They have to be allowed to do that. and then those items would have to be repaired within 365 days. Is that what you were saying?
Yes, that's what the
Okay.
statute says. Yep.
So that's the roller coaster. You jumped on the roller coaster, there's no stopping it type of thing. If the building is in that kind of shape, it's go time. And the board, whether they are on top of things or totally inept, they're going to have to do this. No ifs, ands, or buts about it.
There's no exceptions. But that's why I say who you hire, matters. Do they have
Yeah,
experience in this? Are they qualified? What's their agenda? A
yeah,
lot of the phase twos that I did, I would say 90+% of the phase twos that we completed, and I did probably over 750 of these easily, initially, ended up in us just documenting a letter of a phase two. It had no invasive or destructive testing associated
gotcha,
with it, at all.
gotcha. Okay, so that's the milestone.
Yep.
That's the actual visual inspection of the structural items.
Yep.
That's a very, very important step of it. And then you talked about the Sears report or the structural, what is it? What's the acronym?
Yeah, so Structural Integrity Reserve Study, SIRS, SIRS.
All right. So, in the big picture on this, condominiums have been doing reserve studies for decades.
Yep.
I remember I owned a condo in Georgia. We had a reserve study every 5 to 10 years. And what it does, in a nutshell, is it advises the board whether they are underfunded or overfunded on particular maintenance items. Is that fair?
Yeah, it takes in account what condition the asset is in, what the remaining useful life is of that asset, and then what's the replacement value in today's cost. And then we can tell you, are you adequately funded, right? Are you
Yeah.
underfunded? Are you overfunded? And project that over a 30-year.
So, as an example, you're talking to that condo board that, their premiums skyrocketing. That reserve study would show, okay, you've got a useful life on the roof of 10 years. You funded this much of that. You're either underfunded to be able to replace it in 10 years, or you're overfunded or whatever in
Yeah,
between. That sound fair?
that
So
sounds fair.
the one thing that people tend to get confused about is number one, these two reports are linked. Milestone and the Sears are very much linked. If you have to do one, then you're going to have to do the other.
Well, not necessarily. So
Okay.
that is somewhat true, but the SIRS, if you were turned over to unit owner control by July 1st, prior to July 1st of 2022,
Yeah.
you
So
have to perform the
basically a
SIRS.
new condo building, a pretty new condo building.
Yes, yes. So where the 30 years you have or
Yeah.
on the milestone, this is July 1st of 2022.
Yeah, so I like this. And you said this before at the beginning of the show, that if you don't do it today, it's going to be twice the cost tomorrow and twice the cost on the third year. What I like about the turnover part of this is we're not waiting 30 years to tell you about these issues. We want you to know the day that we turn the property over to the members.
Yep.
And so that's that third question on your condo addendum. It's, is the property subject to a turnover inspection? Just globally, this is for new condo buildings where the developer has sold out their units or most of them and is turning ownership of the association over to the members.
Yep.
So if it's an older building, if it's 20 years old, then turnover is not going to apply. And in that case, neither will Milestone, neither will Sears.
Yep.
The other confusing part that people tend to mismanage is sometimes they'll see that the condo building did a reserve study.
Mhm.
It doesn't mean it's required.
No, you should. So I want to go back. There's like 3 points I want to hit. Turnovers, right? You buy a new home, you buy into a new
You're a lot
community.
smarter than I thought, Michael. This is great.
I know I screwed up, and yes,
I'm used to
we
having
knew each
Mike
other
on
in
the
high
show.
school,
Come
right?
on.
I've surpassed the expectations. The turnover, though, I don't care if it's a condominium or a single family home, guys. It makes no difference to me. Okay, when you turn over that asset, that is the most important time for you as a homeowner. Okay. I don't care if it's condominium, high rise, or single family. That is when your obligations start. Okay. And just because it's turned over to you on March 1st of 2025, and you have a condominium association, Most people come to me and go, Mike, we got like 5 years, 10 years before we got those
Yeah, it's
big
a new
ticket
building.
items.
It's
And I'm
fine.
like, yeah, actually, we should probably talk, and I'm going to have to break you the hard news. One, the developer was underwriting a lot of the cost, so your fees are going to go up
They were
because
deferring maintenance or
for your deferred maintenance, and they only accounted for so many items. You went from 9 items, now we have 70 items that you need to account for. So you really should do a traditional reserve study. The other thing is when they hand that thing over to you, they are using builder grade products. So painting is imperative. Waterproofing and evaluation of that is imperative.
yeah,
Your roof maintenance program is imperative. These are big, big, big ticket items that you don't have the money for right away. Maintenance is crucial, and making sure that that building might have been painted 4 or 5 years ago before they turned over to you. Well, at the date of turnover, you have like 12 months, 24 months before you probably have to paint a majority of those buildings or those assets. So that's important. The other caveat is, in the SERS, now you have to be 100% funded. And that doesn't mean you have to have all the money in there today. That means, like, you use the roof, for example, because that's typically the
yeah,
biggest ticket item. If you have 10 years left on your roof and it's $1 million, you have to accrue $100,000 a year for the
every
next
year.
10 years. So that way, when that asset expires, you have the value to replace it. And then third, is the insurance carriers are looking at all of this, right? You might not be required. You might be a single story condominium, right? You might be a two-story condominium. You are not immune. They're going to ask you for that engineering report, which
Yeah,
means they want a reserve study. They want to see how proactive are you in your maintenance or your capital improvement projects? How financially solvent are you? Right? Because if they have to choose between A and B and they're limiting their exposure, you mentioned Pelican Bay. They used to want 100 associations in Pelican Bay. Now they'll only take 5 or 10. So if you have to compete against those other 100, how do I look more appealing? I haven't done any painting or roof projects or maintenance or waterproofing in the last 10 years. We're 40% funded. Or I got option B, who paints every 7 years, right? Has a biannual maintenance program, waterproofed recently, and is 80% financially solvent, right? Well, yeah, let me sign up for option B,
yeah,
right? I'm
yeah,
protecting myself. The insurance industry, they're financial institutions. They just happen to offer you insurance
yeah.
so that they can invest their money. They're not stupid people, right? They're actually very intelligent and extremely well qualified mathematicians,
And
right?
pretty
And
shrewd at times.
they are. So
Yeah.
they're going to look at this risk analysis and say, yeah, give me those three associations that are financially solvent. So that's a important way of looking at it as well. It also helps from a real estate perspective. I talk about this all the time. Um, from a real estate perspective, if you're financially solvent, if you perform your capital improvement and deferred maintenance projects, and I'm either selling the home or buying the home, that stands out versus this association next door who hasn't painted in 15 years, who hasn't done anything with their roofs, hasn't maintained their roadways, etc. And as a homeowner, as a potential buyer, well, I want to look at that and go, hey, I'm not going to get whacked with a $20,000 assessment. These people know what they're doing. These are my legitimate fees for operating this association, and I know they're going to take care of my investment that I just put my money into here.
Yeah.
Right. So, from a real estate perspective, it drastically helps. From an insurability perspective, you have documentation, photo stamped, written documentation. This was the condition at this time.
Yep.
So it's of huge value to the association in the event that we have another
Yeah.
named storm, and I certainly hope we don't. But there are multiple avenues where this helps you.
Yeah. So
How,
kind of, go ahead, Mike.
I've got a question.
Yeah.
How hard is it to get inspectors? Do you find, Michael, there's a shortage, or do we have enough inspectors to get all these inspections done?
Yeah, I mean that's the problem. There is a little bit of a shortage, but I mean down here in Naples, like I mean you've had Forge for a long time, and I'm not tooting their own horn. They do a good job. There are others too that I could refer you to, but down here in Naples in Southwest Florida, we're pretty isolated, right? So there are good qualified people that can have this done, and they'll get to you in 3 months. It might be a 4 to 6 month long process. But I'd rather know that it was done correctly and I had accurate information and an accurate assessment for it being performed. But yes, there are people to do it, but the whole process is going to take you 4 to 6 months
Yeah,
to
I
get.
don't have much sympathy for the associations that missed the deadline. I mean, this bill was passed 18 months ago, 24 months ago.
Well, the original bill was passed was signed into law by the governor in May of 2022. So you're coming up on 3 years, and there's actually, just so the realtors know too, there is a state platform. They are
Yeah.
going to identify you that says you are compliant with these statutes, with the SIRS and the milestones. So in other words, what they're doing is they're telling you and your buyers, hey, these guys over here did it, this association didn't, right? They're calling
Yeah.
you out for not doing it. And
Yep.
if something happened, like a Surfside or even something way less than that, you just hold on to your seatbelt because that association, that board of directors, is going to be a long day in
Yeah,
court.
no kidding. All right, so we got to close up today, but Michael, I told you at the beginning I wanted to learn one thing. And Mike, I want learn one thing. So Michael, what's your learn one thing? What should the audience take away from this, if anything?
I don't want to be on the board of directors because I'm gonna have to go back to school.
Well, there you go. That's learning one thing. Board of directors, they're going to have some education requirements. Maybe that'll make the boards a little bit more efficient, better educated. How about you, Michael?
What I would say is, use qualified people. I think that's, slow down to speed up sometimes is
Yeah.
extremely important. And everybody's in a rush to get things done, or they just want to satisfy a criteria. What I
Oh,
would
that's
tell
so
you is
true.
lean on people that you have. Bill, because I know I just saw my man Don got on here, and I know you guys are from the New England area. So, I'll use this reference. Bill Belichick won a lot of Super Bowls, and so did Tom Brady. But they built a very successful team of individuals around them that allowed each of them to succeed. And for you as realtors, same thing. Having a good attorney, manage. I mean, there's so many factors that go into it. Insurance agents that you all have to go to. But as a board of directors and associations, make sure you all are asking the question, did we comply with this? Is this done? Can I see this? They have to provide you the SIRS. They have to provide you the milestone by statute. So ask the questions up front and see. And sometimes you have to slow down to speed up. I want to make sure they're qualified people. How did you obtain them and what qualifications do they have?
Love that. My learn one thing was kind of the breakdown on this milestone. So the phase one and the phase two, I really haven't looked at phase two and what would kind of go in after that. So that's really interesting. I thank you for sharing, Michael. I you nailed it, man. You nailed it. You're doing such an awesome job. Thank you for kind of fighting for people, fighting for the companies and the boards that are trying to do the right thing.
Yeah, no, I appreciate you having us on. And like I said, I don't, I don't compete against you all much, but I do have a very large respect for what you all do. I've grown up in this industry and I've called this place home for the last 30 years. So it's extremely important, that we all do our part. I will also end too. If you have any questions, concerns, or thought processes, Kathleen Pasadomo, she was just the past president, of the Florida Senate. She held a ton of weight. She's an awesome individual. So get in touch with your local legislators and make sure that your voices are heard. I'm one schmuck telling people at the state level, so I only hold so much weight. But the more people, the merrier. And I appreciate you taking the time to allow us to do this.
Absolutely. You rock, man. Thank you for everything. Mike, thank you as well.
Enjoyed it, learned a
See you
lot.
guys.